Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
What's up with the camera? Bit blurry, isn't it? Let me see what's going on. What is this? Day what? Day 4? Why is my camera blurry? Yikes, bruv. It's a madness here. It's a madness. Anyway, let's progress. Good morning, and welcome to I'm the Trader Live. I'm the Trader Capital Live Training. First and foremost, all glory to the Most High. Please, let's bow our heads and pray. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbors. Please let me not lead anyone that listens to me astray. Use me as a vessel to bring your children back onto you. In Jesus' mighty name I pray. Amen. 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 Can you hear me? Can you hear me? Sound check. Sound check. Oh no, what's going on with my camera? But it's mad blurry, isn't it? Yeah, this is gonna have to be tomorrow's problem. It wasn't like this when I did my run through. Okay, it's coming back to normal. It's coming back to normal. Okay, all right, all right, all right. It's coming back to normal. All right, cool. Yikes. Before we jump into the charts, all right, there used to be a time where I sat in front of the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping the trade will work. And that's where most traders are. Not because they're not capable, but because they don't have a structured process. The biggest pitfall that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, or 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets. So you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go, get it? Because we're taking you to the 10% and then fast tracking you to the 1%. But before we dive deep into the 3 pillars, when you step into this arena, this battlefield, you must first have two crucial realizations. One, trading is war. This is not a get rich quick scheme. Trading is the hardest thing that you'll ever do in your life. Two, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets come from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Second is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. Third, we have trading edge. This is where all traders start. I know this because this is where I started. And that's why in today's session, we're going to hone in on our trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And that confidence comes from 3 things. One, understanding how the market actually operates. Not what social media thinks, but how money truly moves. Two, having one trading model. One model with IPTA signatures that you trust and execute consistently. Three, having a plan and process. Because without a plan and process, you're just winging it and you're reacting to price. And this right here, this session, this is where we focus on the third piece, the process aspect. I'm not here to force trades, all right? I'm here to execute my plan. step by step in real time. All right, let's get into the live trading floor. Hopefully, we have no mishaps. uh, As you're watching, don't just look for entries. Pay attention to the process because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, this is where we break down all three pillars inside of the program. I used to think winning trades build confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, why you're doing it, before, during, and after every trade. And that is what we're building here. All right, as always, let's get into it then. Our weekly target, always start with our weekly target. All right, it's 3%. Mental check-in, feeling generally okay. All right, I'm getting a little bit better from my sickness, so happy about that. I got a little bit better sleep last night. I wasn't coughing as much as I've been coughing recently, so feeling generally okay, right? Excited to see what price action has in store for us today. Excited to continue to grow, all right, and get 1% better in these markets. Yesterday was an amazing data collecting day that just really opened my eyes a lot. So I'm excited to walk it forward and just keep collecting the data, really and truly. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Thursday, April 9th. We have high impact news come out at 8:30, and we have medium impact news coming out 10:30 and 4:30. All right, we have high and medium impact news today, making it an optimal day to take a trade. If we don't have news, all right, it's not an optimal day for us to take a trade. Doesn't mean we can't trade. It's just really not an optimal. We prefer days with high to medium impact news. Okay. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 on the day. That gives us 3 bullets, all right, to 3 losses. We're done for the day, all right, for the risk. Weekly program going to this week has been established, all right. We're in a buy. Initially, it was in a sell program, and then it flipped to a buy program. Okay, so let's go ahead and review price action to see if anything's happened to change our weekly program. There's a lot of edits going on. There's a lot of edits, changes going on here. All right, I made a few changes, nothing too major. All right, nothing in price has happened to change our weekly program. For our weekly program to change now, right, price will have to come all the way down and take Tuesday's low. All right, that would flip our weekly program. So for now, still in a buy program for the week, but obviously we go based on the session. We don't really need to know our weekly program. I just like to know overall where my week is going. This is how yesterday finished. There was pretty much no trade in the PM session for me, right? The hour of engagement, but a lot of data was collected. I had a setup form in 150 macro complete outside of the macro like it did yesterday, and it did what it was supposed to do. So I'm collecting data on those, and obviously the more data I collect, I'll add those trades into my arsenal. But yeah, so no trades was taken for me in PM session. Let's get into our 3-step process. We do the same thing, just a different day, right? Just a different day, different price action, but our system, our process is still the same. Nothing changes there. First thing first is determine our condition, which is our bias going into the session. And in order to do that, as always, we go from 12 a.m. to current price action. We know the lowest low to the highest high. Nope, that's not the highest high. This is the highest high. And that would be our dealing range. It used to be dashed lines. I make them solid lines just because we're on a cleaner chart now. So let's see how it goes, and if I don't like it, I'll adjust it. If it doesn't look clean, I'll adjust it, but for now, let's stick with it. All right, so we got our dealing range. Next thing we note is key liquidity above and below our dealing range. All right, so above dealing range, we have, you know what, let me get the names on here. just so I'm not second guessing and stuff. We have New York PM session buy side. Let me give it room. I might be changing the thickness of these later on. Yeah. Above that, we have lunch session buy side. And then above that, we have AM session buy side. And above that, we got previous daily high right here. Cool. So we got a buy side above price, and below price we have, yeah, it's PM session sell side. Look at Asia low right in line with dealing range lower quadrant. Ooh, and they say there's no algorithm. Let me shut up. And below that, okay, we go AM session sell side. These are all potential draws on liquidity depending on which side of the dealing range gets taken. Okay, that's why we're noting them. And below that, nothing really. Previous daily low. All right. So, and we still have the remainder of this inefficiency down here. So we're paying attention to that open range gap from yesterday. Didn't even reach consequent encroachment. Let me fix my 20-day look back period. My high is right here. Targeting these relative equal highs here. All right, dealing range buy side getting liquidated in front of us. Ooh, interesting. Right before opening bell too. So this is very interesting. So our session bias has been established, all right, already as buy. We're in a buy program, which is in line with our weekly program. Okay. So draw on liquidity. Let's get our magic magnet. Our magic magnet up in here. Because the magic is in the magnet. You know what I mean? It's really not though, but alright. So first draw on liquidity is PM session buy side here. That is our first draw on liquidity since dealing range buy side has been taken. Now for us to change bias, all right, price would have to come. I have to change the color of this. How do I do that? Because it's white, yeah. What do we want to do? Let's do this pink thing. Price will have to come all the way down here, all right, and take dealing range sell side here, all right, for our bias to flip then to sells. Opening bell, we're kicking off. Ding, 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 ding. Opening range gap is below price, so we gapped up, so we have a premium gap up. We can adjust our dealing range because we've taken this 15-minute candles high, we traded to and through it. All right. right, for retracement setup, we will need this market structure shift. What just happened? That will be the low that needs to go for us to be interested. This low here takes a high, okay? So it's a valid entry for our current time. I don't know which account this is on. All right, let's do it then. If it gives it to me, I will be interested, depending on if it allows me any contracts or 2 contracts still. All right, that big ass stop. Nothing yet. All right, hasn't been confirmed. How's the charts looking? How's the charts looking? Gave it to me there. What just happened? Surplus order placed on MQ by 2. Okay, but where's my limits? Oh, but I'm not seeing that. Oh, mate. Okay, but I'm still not seeing the orders. There we go. That was annoying. We're tagged in there, by the way. We're tagged in there. Hold on. Entry, exits. I'm selling, so let's do 1. Buy limit here at 16, 25, or 18. Okay, let's do it above here and then drag it down. Next we have I need to adjust this to 1 in it. That's why it did that to me that time, because I already have 1 here. Oh my goodness. Oh, this is crazy stuff. Anyway, let me make sure my stop is correct. 107, so let's go to 108. You can delete this. out of our hands. It's in the market, our trade management, our model's hands now, right? Nothing we can do. But just pay attention to the price action. There's no fresh internal liquidity here that I would be interested in a continuation setup from. So let's wait and see. Yeah, so that's why, because I'll take one off here and one left, and that's why it got me in again. That makes sense. That makes sense. Because I was wondering, why would it get me in again? Still getting adjusted to this. I don't know why it doesn't let me reduce my. Cannot modify this type. Please cancel the order in place. Oh, okay. So I can just close and just set another one. Cool. No biggie. No biggie. Not a big deal. Not a big deal. Every trade that you get in is a losing trade, right? Every trade is a losing trade. That's my mindset. Every time I'm in the market, every trade I get in is gonna be a losing trade. Okay, looks good. Looks good. I'm watching this to see how I gravitate towards my drawn liquidity. It won't help my current trade, right? But I'm still data collecting. For my trade, I'd want to see price disrespect this inefficiency here with a body closure. Show no regard for it, like it doesn't even exist. not like that. Don't like that. I don't like that. I don't like that. That's pure respect right there. It's out my hands though. I'm, like I said, mentally, experience wise, I'm not at the point where I can cut a trade, right? Even though I'm seeing characteristics that I could potentially be offside, I didn't want to see price respect. This inefficiency is respecting it. All right, close way above it. Next candle is shooting up. All right, so I'm seeing signs, right? I'm building the experience here. I'm seeing the signs that I could potentially be offside, but I'm not mentally at a point, right, in my trading where I can just cut the trade early. Because I've been burned so many times. You don't understand. I'm trying to, fix that scar tissue, but it's hard. Once you have a scar tissue, it's hard. That's why you have to do this the proper and correct way, right? So you can avoid scar tissues that are hard to combat, like hard to overcome. Right now, my scar tissue is too deep. It's too deep. I mean, too deep. This order block here is my last protection in this trade here. I want to see price respected. I don't want to see a body closure in the mean threshold of it. Which we are getting. Alright, so multiple things are telling me, right, that I'm offside. I know I'm offside, so I'm accepting the loss here already. What time frame is this? 1 minute. Hold on. Yeah, definitely got a closure above the mean threshold of this order block. So trade is done for. Prepare for the loss. Only thing promised to me. Thank you very much. Nothing wrong with that. We saw that coming. So we're not hurt by it. We learned. We grow. Cool. Fourth loss here now. Experiencing a series of losses. But I'm gonna maintain my cool. Nothing wrong. That's just how it works. Losses are the only thing promised to me. So now, like I said, I'm paying attention to this inefficiency with the first presented fair value gap to see how price gap gravitate towards my drawn liquidity there. Is there two drawings here or what? Nothing wrong with taking losses, right? That's the only thing promised to us. It's the only guarantee in this game. The only guarantee. This will now be the new low I would be interested in. Seen a lot from this price action already. This low takes this high and it takes this high, making it a viable market structure shift for this time. did also come into EQ of the dealing range, which we can barely see in this white thing here. I need to fix that. Taking L's on the chin, boy. Taking it on the chin. Traceman subs going through it. They're having a dry season. It happens. It happens. Before this, that was like the best trade for me. This is the low that needs to go for me to be interested. Still have 2 bullets left, right? We still have 2 bullets left. Now we've gone down to 1 contract. I like that though. That's my next phase of progression. That's my next phase of progression. Once I enter the trade, paying attention to the candlesticks to seeing if I'm seeing the characteristics that says I'm on side or offside. Yeah. So I can get over that scar tissue, right? Start to rebuild on that scar tissue some positive reinforcements. For now, I just watch it, alright, until I build more experience and I'm able to be like, okay, yes, this is what I've seen so many times. I know what's coming. Let's avoid a full risk out, right? So I can at least reduce some of that risk. Because if I know it's coming, I can get out and reduce the risk that I put initially. 950 macro about to kick off. I'll be watching this. With that wick, I probably should just left it there and not put a one above. It's already high enough, isn't it? Gives it to us. We will be pulling the trigger. It did So I did my part. One contract out here, 625 right there. Once again, it's out of our hands, it's in the model, the market, and our trade management's hands. Nothing we can do here. Paying attention to this inefficiency here. Should price come in there? That's 4 losses in a row there. 4 losses. 2 on Tuesday, 1 yesterday, 1 this morning. This will be the 5th trade. Ooh. 4 straight losses, series of losses. That's a promise. That's a promise. I think I have 12 until this account is completely depleted. So yeah, I got it. I got it. I ain't stressed. I ain't worried. Been here before. Come out of it. We do it again. The great thing is, my process doesn't change. Whether I'm losing or winning, my process doesn't change. And that's for me. That's the best part of this whole thing. Like, I don't care about none of that. I don't care about the outcome. I don't care about anything, as long as I have that process and I've already collected the data and seen enough to be like, yeah, this is gonna win more times than it's gonna lose. Yes, I'm gonna have a losing streak. Yes, I'm gonna lose trades, but I'm gonna win more times than I'm gonna lose. It's just a matter of letting the probabilities do their job and just being disciplined enough to trust your system, trust your process, and just keep doing it. Keep doing the same thing over and over. What have you noticed so far, since we started this? What have you noticed so far? What have you noticed so far? What I've noticed is that I'm doing the same thing each and every day, regardless of whether I'm winning or losing. I'm doing the same thing each and every day. Let me know in the comments what you've noticed since we started this. This is what day. We didn't start, but we started Monday. This is day 4. Day 4. This is day 4. Day 4. Taking out that trade for a profit. All right, we entered in here. First, take profit out here. Let's see what else this trade will offer us. All right. Right now, I'm not seeing any internal liquidity that I would be interested in catching a continuation on. Okay, until 10 p.m. and opening range is confirmed. 10 p.m. Shit. Sorry, excuse my French. Until 10 a.m. when opening range gets confirmed. One loss, one winner. Let's see the outcome of that. Still down on the day. 181. Doesn't really show me the. I would like to know. I guess I'll see that later on then. Like the outcome. Either way, we're still down on the day. First win on the account though. First win on the account after 4 losing trades. We're looking to see what else this trade would have offered us, all right, if we had more contracts and if we were still in the trade. Once you're out of the trade, your job is not done, right? Your job is not done. Your job is never done until until your session is done. Right? It's about data collecting, building experience, and growing, getting that 1% better. The reason I use the bodies for targeting wise is because this range has 4 bodies. All right, it has enough bodies for me to judge by the bodies. The bodies always tell the story. The wicks do the damages. And plus, it was a decent amount of distance from entry to target 1. If we did the wicks, right, still would be in it waiting for -1. I'll collect the data on both and see which one makes sense, right? Whether I'm going to do the body at the top and the wick at the market structure shift, because that's where I'm framing an entry on. So I would like to include it as a target wise, but let's collect data on it. For now, I'm fine with the bodies here. Just not ask too much of the market with the current market condition. I'm trying not to ask too much of the market and just take profit when it gives me the opportunity to. I know I've been moving a lot. That's because sometimes this chair is uncomfortable. I'm trying to be, professional and not move too much. Have too much movement going on. Soon I'll have a standing desk or a stand up, elevate desk that goes up and down so I can stand. So I would prefer to stand here. Oh, it's 10 a.m. That means opening range, sell side, opening range liquidity has been confirmed. Yeah, I'm gonna change the color of these to maybe this. Yeah, I think that's what I'm gonna do, just so I can differentiate opening range dealing range sell side in terms with my liquidities. Yeah, there's a lot I need to adjust here, so just give me some time. We'll get there. It's only the first week, you know what I mean? It's only the first week, you know what I mean? We're still getting our bearings. We're still getting our bearings here. We're still getting our bearings. Now, for the continuation, nothing here for me yet though. Let me know what you think about the lines, if it's too much, if I need to adjust it, colors, scheme. Give me feedback, give me something. I don't mind how it looks right now though. I won't be interested here, alright, because we didn't trade to and through internal liquidity. We still haven't taken internal liquidity, so nothing for me to do here if we take this high. We have time, alright, but that's all we have. Framing entries on midnight open, I think will only be the only opening price I'll be interested at, or new week open. Let's watch the dollar see. I'm watching that same setup here using midnight opening price. Let's see. I can delete this. I want to see how price behaves in here. that reaction from there. We're seeing what else this trade will offer us, all right? And we're also anticipating a continuation buy setup to draw on liquidity since we took dealing range buy side, all right, established our condition as buy program, all right. After dealing range, one side of the dealing range gets taken, price can only do two things. It can retrace to then continue in the direction of in the same direction of where it just came from or it took, or it can retrace to reverse, right, and take dealing range sell side, which will then flip our bias from buys to sells. Right now, the only internal liquidity that I'll be interested in seeing a continuation set up from is opening range sell side right here. Two minutes left in this macro. I'm also gonna pay attention to entry, but sometimes I'm gonna risk not getting tagged in the trade. Stick what I have for now. Collecting more data. The more data, the more experience, all right, the more refinements we can do. So right here on the first initial trade, this candle, this would have been my either reduce risk or close the trade alarm bells thing in here when we close above the mean threshold of this order block here. That would have been my sign, my cue to be like, oh, yep, reduce risk or cut the trade altogether. I think initially I'm going to start with reducing risk if it gives me the opportunity. If I'm only in it one contract, then obviously I'll just have to be okay with it coming to hit my stop. But if it's more contracts, I'll reduce risk because, like I said, my scar tissue still hasn't healed. Okay, it's still there. I still have those memories. I have nightmares about them. I'm just messing, but still. I'll need to see it really come and take buy side here in this candle, on this candle, right? In the next 30 seconds to be interested. If it doesn't do it on that candle, even if it does do on that candle, it won't confirm a swing high there. So really pretty much this will be the high that needs to go. With that one single candle, 16 seconds left, it's not happening. It's not happening. So that's cool. But we've taken opening range sell side there. All right, I'm gonna watch outside of this trading times. If we get market structure shift here, I'll be paying attention. We're also watching to see what else this trade offers us here. It's giving us -1. Waiting to see if -1.5 is on the cards today or not. Are you on the cards today? Oh no. All right, now we can jump into our first question of the day. Let me pull it up. Let me pull it up. If you get market structure shift here, I'll be paying attention. Nothing that I would personally engage in right now. Okay, like I said, I'm collecting data of setups that start in the macro and complete outside of the macro. So far this week has given great data on the side of these trades. So as we collect more data and build more experience, all right, we might be including those in our entry arsenal. So it would have been confirmed. All right, we're watching this continuation setup and how it plays out. Right now, it's not one that I would personally engage in, right, because it's completing outside of my trading times. However, I am collecting data on setups that start in the macro and finish outside of the macro. Okay, so we're watching this continuation buy to our drawn liquidity up here, which is PM session buy side. So let's see how it plays out. Let's see how it plays out. Would have been tagged in it, whether in this candle or this next candle here, we would have been tagged in that trade now. I'll put a tool so we can just watch it, so we know what we're currently paying attention to. And we're still watching this retracement setup to see what else it offers us. All right, it already gave us -1. We're still looking to see if -1.5 is on the cards today. Excuse me. This one's the easy one because we answer it in the beginning of our stream every day. Why do 90% of traders lose money? Why do 90% of traders lose money? You should go back in the beginning and see. 90% of traders fail because because of these 4 pitfalls. They have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. All right, these are the 4 pitfalls that causes 90% of traders to lose money. That was an easy one. We like that one. Looking like we'll be taking an L on this one. Yep. You would be taking a loss. QQQ. Two for, one against so far. Let's see if -1.5 is on the cards today. Good to know. That would have been a loss there. That was an easy question there, wasn't it? That was an easy question. We like that question. The 4 pitfalls that causes traders to fail and lose money. Okay, this one is in regards to risk management. Oh, there's a 2-in-1. We'll do that 2-in-1. How do you put it? Question is, do you move your stop loss? Do you move your stop loss? For me, my risk plan, right, that I'm on, yes, I move my stop loss. Let's talk about it. Let's talk about it. So, in terms of stop loss adjustment, right, you can either do full pull, right, meaning what we just did, right? What was the entry here? Exit there. Stop here. All right, no movement. One contract. All right, we didn't even have the opportunity to partial anyway. But regardless how many contracts you're getting in at, right? You're entering, you're putting your stop, you're putting your exit. So it's either it's gonna hit your take profit or it's gonna hit your stop. That's full pull, right? Whether your exit is here or your exit is negative 1.5, right? That's full pull. Full pull means you're getting in, no partials, you're not partialing. So it's either going to be a winner or it's going to be a loser. And you're accepting that risk. For me now, I don't do full pull. I partial and I adjust my stop loss. So I use the fib, all right, the fib extensions. That's how I manage my trade. That's how I enter my trade. That's how I manage my not that how I enter my trade. That's my entries on the market structure shift. I use the fib of the leg with that market structure shift, all right, to manage my trade and manage my stops. That's why it's color coordinated here, all right. My entry is always at the market structure. Oh, don't complicate my life. Negative 1.5 getting smashed there. Okay, negative 1.5 getting smashed. Let's see if negative 2 is on the cards today. Let's see if negative 2 is on the cards. At that point, right, if negative 2 is on the cards, we're heading to dealing range sell side and our bias, what happens? It gets flipped. But anyway, let's progress here with the question, do you move your stop? It's a choice, it's a personal preference, right? But for me, I don't move my stop. How I manage my trades is, like I was saying, I use the Fibonacci. All right, once I enter a trade at negative 1, I'm taking something off. If it allows me multiple contracts, right, I'm taking something off and I'm adjusting my stop either to 1 if I'm using the bodies, right? But if I'm using the wicks, I go to 0.75. But if I'm using the bodies and there's a distant amount from the bodies to the wick, I'm going to use 1 as my adjusted stop loss, right? And at negative 1.5, I take something off. I don't adjust my stop, okay? At negative 2, if this is all bearing with in mind that we have multiple contracts, our risk, our entry and our stop has allowed us multiple contracts in the trade, right? Then I'm partialing. But if not, all right, if it like this trade that we just took, it only allowed us 1 contract. It was a full pull trade, so we were out at negative 1. You can't partial if we're only using 1 contract, right? But anyway, at negative 2, I'll take something off as well if it allows me, all right? And stop will be moving to 50% of this leg right here, which is right here. Then at negative 2.5, I'll take something off if it allows me. Yet again, stop stays the same. At negative 3, that's when I move to break even. All right, I'll go a little bit better than break even. So third partial, no, third, it won't be actually before third. 1, 2, 3, 4, 5, fifth partial is when our stop goes to break even. And at that point, If we still have more contracts left, we'll just leave the trade and let it run. We won't adjust stops. And once I get to break even, um, I just leave the trade alone. I don't adjust the stop anymore. At that point, majority of my trade will be off already. All right, and it will be a risk-free trade, really and truly. So I like to give the trade room to breathe. All right, so I'm not like stifling the trade. I'm giving it room to maneuver and still give me the opportunity to partial. So do I move stop? Yes, I move my stop if my contract size allows me. All right, and if we get to -1, -2, so whole numbers is where I really I touch my stop at the whole numbers, not at the 0.5s. So yes, I move my stop. There was another question that tied in with that. Let's do a 2-for-1. When do you move to break even? When do you go break even? We just explained it, right? I go to break even at -3 on my fib extension here. If I collect more data and I need to adjust that, I will. But for now, that's what my data has shown to give me the best probability of the trade, giving the trade room to breathe and still, allowing market to go in the direction where I'm anticipating it to go. So yeah, but if obviously we collect more data and it doesn't start to make sense anymore, all right, we'll be adjusting, right? You have to be nimble in these markets. You have to be adaptable to the market conditions and the data the market is giving back to you, right? You have to be able to analyze the data and adjust in real time. That's why I like day trading and short-term trading, because you have to adapt to the market in real time, right? It's like you're not waiting days and weeks to get data back. You're getting data back on a daily consistent session basis, right? So it allows you to adjust on the fly when you need to, based on the data that's coming back to you. That's one reason why we prefer day trading here. I'm the trader capital. There's obviously more reasons. All right. I'm gonna do a free training soon. All right, that will get into more details about that. Yeah. So that answers those two questions. 2-for-1. We love a 2-for-1. But this one's an easy one. I won't even need to elaborate. What's more important, win rate or risk management? Come on now. Which one do you guys think I'm gonna say? That's an easy one. Risk management. Next. That is the holy grail of trading. I don't know how many times I need to say that. Let's go here. Can trading replace? Okay, we go about a good about 5 minutes. We can still answer another question. Can trading replace a 9 to 5? Yes, it can, but not immediately, right? It 100% can, but you have to get to that point. I would highly, highly recommend you not quitting your job once you start learning how to trade. All right, you don't want to be a broke full-time day trader or trader in general. I've been there. It's not fun. It's not a nice journey. It makes the journey 10 times harder than it needs to be. All right, because it messes with your psyche, because right, you have to make money to pay your bills because this is all you have, and your skill level is not at the point where you can do that, right? This is why I recommend 6 months to at least a year. All right, and you have to obviously have seen 6 months to a year to master the skill. Try to master, be on the road to mastering the skill, and have at least 6 months of consistent profitability, right? you're able to make money consistently, right, for 6 months, and obviously you've saved up, right? And then I would say, even then, you need more time, but I would say you can leave your 9 to 5. But yes, trading can replace your 9 to 5, but it's not an immediate thing, right? It's gonna take you at least 1 to 2 years before you get to the point where it's even close to replacing your 9 to 5, because you want to be secure. You don't want to take a trade knowing that you have bills to pay and that this trade has to make money for you. It just adds more to your psyche than you need to, and trading is already 90% mental. All right, so you want to protect your mental at all costs. You want to come into this clear-headed, clear-minded, so you can follow your system or plan. Also, without a system or plan, trading will not replace your 9 to 5. Sorry to say. It won't do that for you. Short answer, it can, all right, but it takes time to get to that point, right? It'll take you at least 2 years, at least 2 years to get to that point. Because one thing you do not want to do is be a broke full-time trader. Whew. That is not fun. That is not fun. No fun at all. You're stressed all the time because you need to make money to live, but you're not at the point, and it's even worse when you're not at the point where you can do that, where your skill set doesn't match what you think you can do. Oh, memories, memories, memories. That's one thing that if I could change about my journey, I would change. Yeah, definitely. Wow, especially wow in the learning process, right? Especially during the learning, the skill, developing the process, the procedures and protocols, especially during that period. Oh yes, definitely love your 9 to 5. Show up with a smile on your face. But obviously understand. Obviously you're not going. Your goal is to get out of that 9 to 5. But initially, yeah, stay with your 9 to 5. Don't quit yet. All right, we're looking to see if -2 is on the cards today. All right, paying attention to the price action. I like what I'm seeing. All right, fair value gap CBs are keeping price lower, right? So we're seeing institutional order flow and support of price going lower, which is what I said I wanted to pay attention to, right? So, yeah. Came down into here, dropped again. Then we have this one, and this order block to keep price lower. Alright, that was a nice fun question to end on. Go less than 20 seconds till we're back to execution mode. We have this suspension block, volume imbalance at the top, volume imbalance at the bottom. Want to see that keep price lower to -2 and to dealing range sell side, which will then flip our bias from buys to sell, going against our weekly program, but nothing wrong with that. Once upon a time, not long ago, excuse me, professionalism. Once upon a time, what I was trying to say is that this was a model I was actually looking at. First presented fair value gap, break below market structure shift, for an entry. So it's fun to see it here. Nothing wrong with having multiple models, you know. Even right here too, we came back into it. Market structure shift back below here. $10.30, first hour of trading is behind us. All right, we look like price is heading to dealing range sell side, which is also London session low. We do have relative equal lows down here, so hyperbole to draw right here, relative equal lows, and we also have these two relative equal lows. And remember, we also have yesterday's consequent encroachment of yesterday's open range gap. All right, still open, so there was no price action from this point into here. So this is a huge bullseye for price. All right, a huge drawn liquidity for price to come back down and fill this inefficiency. Doesn't have to do it today, but just understand that we have a bullseye on price here. -2, you're gonna give it to us or what? So far, this week compared to last week, different price action. I'm enjoying this week's price action. I'm not even gonna lie, I'm enjoying this week's price action. Even though I've taken a series of losses, the data that I'm getting back from this week really has leveled me up for sure. I'm enjoying the price action this week. So these now, hit and miss, innit? Hit and miss. Da 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 da. Don't think we're gonna get a continuation anytime soon here. Right now, for a continuation setup, price will have to come and take this short-term high, causing this market structure shift above key liquidity here. Open range sell side, inefficiency, liquidity. For me to be interested in a continuation setup. But right now we're super duper close to dealing range low. So what are the chances that it's gonna come to dealing range low right here and then turn around? Knowing that we have these relative equal lows down here. Itching slowly towards -2. I like what I'm seeing in the institutional order flow. I like that. -2, -2. Here we'll be adjusting if and when it gets hit, right? If you were still in it, we'll be adjusting our stop to 50% of this range here. Let's draw it out. This range. This is the range with the market structure shift here. Okay. So we'll be adjusting it to 50% right here. If it gives it to us. If we do take the high, do I want to be ready? I want to be ready. I understand and know that it could potentially be engineering liquidity here near dealing range sell side. So I'm aware of that, but going into this trade I'm anticipating. So if I do take a loss, I understand why. However, my entry criteria is if this high gets taken, will be hit and I will be interested, right? Once I see my criteria hit, I want to be pulling the trigger. Okay, I want to be as consistent as possible regardless of, you know, what's going on in the price action right now, because I don't have the experience yet to be like, okay. Plus, I've seen this happen multiple times. It creates a relatively equal lows, gives a setup. Sometimes it comes and takes you out. Sometimes it goes in the direction, right? It's 50-50 in that aspect. So I'd rather just stick to my entry criteria and just execute what I see. Waiting, waiting, waiting. Half the time I'm just waiting. But waiting is also one of the hardest things for traders to do because they feel like the market is moving and they have to be in that move, you know? Sometimes it's just nothing for you to do. That's okay. That is a-okay. If you let these markets, they're gonna send you up sideways, downwards, to the left, to the right. They're gonna market will eat your ass up. You could be engineering these relatively close for a later day, later time, right? It doesn't have to be today. It's back in this suspension block here. Doesn't want to give us -2, does it? Not at all, not at all. It would have given us two partials. Risk would be reduced to the bodies here. This one I'll definitely be using bodies for partialing because there's enough bodies in this leg here. There's enough bodies in here to use the bodies. If he gives it to us, right? We have to take this market structure shift. Then I'll be interested. Which we're slowly itching towards. Oh shit, excuse me. Excuse my French, pardon my French. We in there? Two contracts. We'll be taking one off at -1. the next off at 1.5. We buying, so I want to sell limit. Let's take that to 4.1 right there. I'm gonna close this, set a sell limit. $62125. We are in there, limits are set, is out of our hands, is in the model, the market, and our trade management's hands. Nothing we can do here but pay attention to the candlesticks at hand and see how they behave. This is a continuation setup, all right? Targeting my drawn liquidity until we take dealing range sell side. All right, this will be my drawn liquidity. I also understand, right, that we did come close to dealing range sell side, and we could potentially have engineered, right, relative equal lows here for price to come and take. So I'm aware of that going into this setup. But I've collected enough data to know that it can go either way, right? So for me, I would prefer to enter the trade and not let it go. Oh, we can delete this now. No emotions, no attachment to this. I'm just executing my model. That's it and that's all. Outcome is out of my hands. I'm watching pricing here. I want to see a closure above this inefficiency here. $10.50 macro about to kick off in about 20 seconds. It can either hurt me or help me. Let's see which one it is today. I want to see price disrespect this inefficiency here with body closure. $10.50 macro said, I'm on your side today, girl. I'm on your side today. I'm on your side. I'm with you. Alright, you don't speak too soon now. Wanna see you close. can't tell because it keeps highlighting dealing range consequent mean threshold. Well, we didn't get a closure above that, so we didn't get a closure above the inefficiency yet. So we're not out of the woods. This candle here needs to close above it. Just right in the second, in the last second, it flipped. I'm watching price in here in this up close candle. I'm watching it. See how it behaves in the main threshold. I wanted to disrespect it with body closure in the main threshold. I like that. Just like that. Stop dead in its tracks at first presented fair value gap, consequent encroachment. I would like to mention here, old me right here where price is at would be anxious. I would be ready to close the trade. I probably would have closed the trade already back in the days, right? Because I didn't have I hadn't collected enough data on the model that I was trading to be confident enough to just let the market do its thing, right? Once I was in the trade, once it get close to my take profit and it starts like playing around there and starts turning around at the take profit, I would be anxious, nervous as hell, like, what are you doing? What are you doing? And then I would prematurely close the trade. But I'm no longer that person. Whether it's gonna take me out or not take me out, flirt with my exit, it is what it is. Right now, all right, there we go. -1. Because one and swing low is like right in close proximity to each other, I'm gonna go to 0.75 for my adjusted stop, which is 71.50, 71.50, and we'll change this if it lets us change us. I don't think it will let us change it here, but it's still worth a try anyway. Yeah, okay, so I'll have to close it and set another one. Set a sell stop. Yep, Sell stop one, 70, 71.50, yes. Because from the wick to the body, there's literally a handle or something about 61.50, 60, yeah, literally a handle and some change apart. All right, so I'm electing to go with 0.75 on this one as my reduced stop. So yes, I do move my stop, and as you just witnessed, that was me moving my stop after -1 getting hit. I don't touch the stop again until -2. At that point, we go to 50% of the range here. It used to be break even at -2, but then as I collected more data, I wasn't given the trade enough room to breathe. All right, sometimes I'll get to -2, move to break even, price will drop down, take me out, and still continue in the direction of where I was anticipating price to go. All right, so I've learned from data collecting and experience. All right, I've been able to refine my trade management strategy. Trade management, like I said, is the one thing I'm still uncertain about, that I'm still working on, still trying to find, something that's I don't think I'm ever going to get to the point where I want to get to my trade management, but I just want to get to a point where I'm content. Right now, I'm content, but not too much. Content, but not too content. So, still work in progress, still refining minor things, but in terms of the foundation, I'm solid there. 1050 Micro said, girl, I was on your side. You know I'm on your side. Today I'm on your side. I'm not always going to be on your side, but today I give it to you. Continuation setups for the I don't know, you guys won't believe me when I say this, but like before this week, retracement setups were top tier. This week is not for retracement setups. This week has not been ideal for retracement setups at all. I guess they're gonna have their weeks, right? It's a battle of the retracement and the continuation. Last week and the weeks prior, definitely retracement. This week though, we have to give it to the continuation setups. So, going back to the retracement sell we were in, actually, yeah, retracement is not bad. It hasn't been bad this week. I've just been getting into the wrong ones. Well, not the wrong ones. The probability hasn't been on my side this week on retracements. But this retracement setup here didn't give us -2, so our stop would still be at 1 here. Okay, so you still would be in this sell trade. All right, you still would be in this sell trade. With reduced risk at 1, okay, would still be in here. So when we hit -2.5 on this continuation, that's when you begin taking out of that sell. But after 2 partials, right, stop is reduced. See now, imagine I didn't take this trade thinking, oh, we have relatively equal lows. Let me just wait till it hits dealing range sell side. that would have been additional scar tissue I would have added there, right? Like I said, I've learned from my mistakes. I've learned from the past, right? I've built enough scar tissues there to be like, you know what, this is what I'm gonna do. I understand that yes, dealing range sell side is here and it could potentially take it. Doesn't have to take it right now. If it gives me a setup, I'm still gonna engage in it, but be aware of where I am in the price action and accept the outcome regardless. So yeah, I just telling you, telling you, the market has beaten me into submission, and that's not a bad thing. That's not a bad thing. If you don't have to go through that, don't go through that. All right, but for me, it has whipped me into shape, into the trader and analyst you see in front of you right now. Less than 8 minutes on this macro time frame here. Seeing how price is behaving in this inefficiency here. Wicks do the damages, bodies tell the story. This body did close. Let me just draw the thing out. And closed at it. Just a little bit below it. Closed a little bit below consequent encroachment, but the next candle closed right outside of it. So I like that characteristics. And now the bodies are even failing to come to the upper quadrant of that inefficiency. I watch this candle mess it all up though. You heard me. Yeah. Let's see how it behaves though. Let's see how it behaves. That's what I'm currently paying attention to here. Came back into. Yeah, I think there's a gap there. Suspension block. There's a gap up here. Yeah, there is. I'm seeing a gap there. Came back in here. Sorry, I'm still a bit ill. It's calming down though. It's not as much as it used to be before, but there's still some stuff in there that needs to get rid of. Less than 4 minutes here on this macro time frame. Not micro time frame, macro time. What the hell? There's no regular emojis in this thing? Okay, there we go. What the hell? What the hell? Can I just get a regular heart? Why you gotta mean something? This world, man, it's crazy. One minute remaining. Well, technically two, because we still have to wait for that 10, 11, 10 candle to close. Came down into this inefficiency here. Small but mighty, innit? Well, let's see how mighty it is. This is that 10-10 candle. I mean 11-10 candle, sorry. Alright, we'll give it a few minutes here before we wrap up. See the outcome of this trade. Give you a few more minutes. 11:11. Our session really ends at 11:30 anyway. We've been getting out a little bit early because we've been done a little bit early. But today we'll stay a few more minutes and see what this trade does. I like the reaction of this inefficiency here. I like that. I want to see it continue higher, obviously. Not because I'm in the trade, but just according to that price action that I'm seeing. So yeah, it was packing punch in it. That tiny inefficiency right here says I'm small, but I'm mighty. Don't play with me. Thank you, thank you, thank you. We appreciate it. -1 getting smashed right there. Bagged and tagged. You're coming home with me, baby. Yeah. We'll see what else this trade offers us, all right? You still technically would be, well, for me anyway, at my management, current management, I still technically would be in this retracement sell setup, all right? Well, I'm still capitalizing on this continuation buy here. I'm targeting AM opening range, AM session buy side, and I'll draw on liquidity, which is PM session buy side from yesterday right here. The magic magnet, pulling price to its direction. Let's see if it succeeds today. We'll be back tomorrow, all right, to see how this trade played out. But if you want to find out how it played out for lunch and PM session, join me on live on DJ. It's a private group. All right, right now it's a small group, but the goal is to expand on that group. But it's a private group where you have access to me. All right, you ask questions. We refine your model, your processes, your procedure and protocol, see where you're at in your trading, what you need to get you to the next level. And obviously you get to also watch me trade live there as well privately and ask questions. Unlike this settings where it's pretty much just me teaching and showing you what I'm doing, in that one is more like an interactive type of thing that we got going on there. So if you want to, if you don't want to, you're fine with this. If you don't want to, I also post it on YouTube after it's done. So if you don't want to join a private group, then that's fine. You still get the information regardless whether you join or don't join. So it's up to you, really and truly. But that will conclude our day. Let's do a trade performance review as we watch this head to -2. Oh, I can close this now. I have to be aware of this stuff, right? I need to pay attention to these things. -2 would be getting hit for me because I would be doing one below where the fib is. I always do one handle of the price that you see on the fib extension, one handle below it, just to ensure that I get tagged for my exits, right? And for my stop loss, I always go one below the swing as well. Unless if it's a wick swing like it was this morning, I probably should just left it at that wick. But -2 getting smashed. Once -2.5 gets hit, we know it would have been taken out of this retracement sell here. Anyway, trade performance review. What I did well today, all right, is that I showed up. All right, I got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Stuck to my procedures and protocols and didn't deviate from it. Very happy and pleased with my performance today. Also, I would like to note that I'm happy that I didn't let, price being close to dealing range low and potentially taking dealing range low affect me from actually entering a perfectly good setup that met all the criterias, okay? That's because I've collected enough data to know that, hey, I can trust this, but still understand is a 50-50 probability, but I still go with being able to execute on my model when I see it anyway. Anytime I see my model, I want to be able to execute on it without any logic, without any feelings, without any thinking, with nothing really going on. Just robotic. Just I see the model, I'm executing. So very happy and pleased with my performance this morning. Where I fell short today would be I did half of my morning routine. I didn't do all of my morning routine, but I'm kind of getting to the point where I want to limit, do the half that I did do, and then the rest I can always do post AM session, right? So I did get my morning routine in. The wake up time wasn't great, but it also wasn't horrible. It was an hour before I had to be at the desk. It was about like 8 something. Okay, I usually want to be waking up around 7:30 ish. All right, 7:30. 7:15 ish, 7:30. That's why I really want to be waking up. But I digress. That's where I'll say I fell short. Um, yeah, not a decent wake up. Well, it wasn't too bad, right? But wake up time could still be improved, and morning routine. Well, not completely finishing it, but I did half of it anyway. We digress there. Chart wise, I don't think I fell short anywhere. Showed up, stuck to my precision protocols, didn't deviate from it, even after taking a loss. Didn't phase me, right? The market gave me another opportunity. I jumped in. I saw a continuation setup. I jumped in. All right. So yeah, very happy and pleased with my performance. How can I improve for next day, next trading session? Is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses that I have experienced deter me, distract me from my model, my procedures and protocols, and what I got going on, right? Keep taking small steps in the right direction, and eventually we'll get to our destination. Analyze, 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 analyze data, analyze data. One thing I am slacking on, that will go back to where I fell short. One thing I am slacking on is sorry, I'm transitioning from one journal provider, all right, and I'm looking for a new journal provider. So I haven't really been journaling as I would like to. Journaling is very vital to my survival here, and it's what has got me to this point. So I don't really want to start slacking on my journaling. So get it together, baby girl. All right, get it together. All right, because you've been slacking on that journaling part, and that's that's our breadwinner right there. Okay, journaling is vital. So don't start slacking. All right, you haven't made it yet. You're not there. Even when you make it, you're still going to be journaling. So get back on that. That's just a little reminder for me. All right, to know to be aware of where I am and when what I need to do. Okay. So yeah, that's how I can improve for next day. Let's break down our trades for the day. Let's break down our trades for the day, and then we can get out of here. Beautiful, beautiful continuation setup right here. Whew. You know when you see sexy ass price action, you just have to admire it. Negative 2.5 is upon us. All right, we're almost there. But anyway, we digress and we progress. 9:30. All right, we took dealing range buy side, confirmed our condition going into this session as buys. Okay, so we're anticipating a retracement to then continue going higher. That's always what we anticipate. All right, but we also understand the price can retrace to reverse. All right, and flip our bias at the same time. Like we were very close to doing, but it didn't do it. Took dealing range buy side swing displacement market structure shift back below it. We had the breaker entry at the time. All right, this swing low took a swing high, so breaker entry at the time is valid. All right, we got in, nothing wrong with that. We took a L, nothing wrong with that. Losses are the only thing promised to us. We actually knew that we were going to take losses just from the price action. Once we closed above mean threshold of this order block, I was like, yeah, this trade is cooked. But once again, I'm not at the point where I can close the trade prematurely. I don't mind reducing risk if I don't know how many contracts this one had us in. Let's double check. What was the short position? Or 2 contracts. Okay, so as I collect more data, right, I wouldn't mind once this candle closed above the mean threshold and I was one inside to let me know, hey, potentially you could be offside. Yes, let's at least take something off if we can, right? If there's more than one contract, I don't mind reducing the risk on the trade and then letting the rest come and take me out for what it is. So as we collect more data, that's an adjustment that I'm thinking I'm going to make in that. All right, as I gain more experience in being able to understand, read the institutional order flow, understand the characteristics I want to see in the move. Okay, so note to self on that one. And then, right after we took buy side here, okay, swing high, displacement, drop down, took market structure shift back below the key external liquidity, dealing range high, gave us another opportunity. Alright, we entered the market, big bang, biggity bosh, stop, gave us -1, it only allowed us one contract. Okay, so we were out at -1. The trade offered us negative 1.2, 1.5. Sorry, failed to make it to negative 2. All right, and now I believe it would be, yeah, it would have come and taken negative 2.5 smash on that buy. It would have come and taken us out of our retracement set up here once we adjusted the stop. Fair enough, nothing wrong with that. Price continued. First hour was upon us. All right, 10:30. All right, hold on. We failed to take dealing range sell side, so our condition is still buy. All right, swing displacement. All right, back above the key internal liquidity, which was AM session opening range sell side. All right, we took liquidity above it, short-term high, market structure shift, entered, stop at the low. So from the point of the market structure shift down low, what's the lowest low? This is the lowest low, so that's where our stop will go to. All right, stop was placed here. It allowed us 2 contracts. Okay, so we took one off at -1, reduced risk to 7.5, and then final terminus was hit at -1.5, where the trade was closed and taken out of our final contract. And as you can see, so far it's offered us -2 and -2.5 on that trade. We're targeting opening range buy side and our drawn liquidity, in our first drawn liquidity, which is PM session buy side from yesterday. Okay, so we'll see how price gravitates towards the magical the magical magnet, all right, and how it does its job today. But other than that, solid trades today, solid performance from me on my behalf. I'm very happy and pleased with my performance today. All right, stuck to my processes and didn't deviate from it, right, regardless of taking losses. All right, regardless of what I was seeing in the market, regardless of my feelings and what price was doing. I saw my model, saw my execution. It gave me the green light, go ahead. I executed, no questions asked. Solid stuff. Very happy with today's price action. This week's price action has been top tier compared to what we had last week. Whew. Yeah, beautiful. If this is how it's going to be moving forward, I'm happy and I'm excited. All right, before we wrap up, let's get into our little closing then. All right, solid day from us here at I'm the Trader Capital. All right, just same processes and procedures and protocols that we have. We're following it each day. Like I said, each day has been the same. My processes doesn't change, right? But regardless of what the market is doing, my processes doesn't change, and I love that aspect of my trading. Is something that I wish I had in the beginning. All right, it would have cut my learning curve by 4 years at least. By 4 years. Whew, that's 4 years go by like that though. Anyway, there was a time back when I started trading, right? I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And that's the point where I'm at. I feel like now I have a real edge in the market, right? That I've tested, I've back tested, I've walked it forward, I forward tested it, I demo traded, and now we're walking it forward in not live trading, but simulated live trading, prop firm trading. Still not live trading, but we'll take it for what it is. And here's the truth: most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created a 10% to 1% club. That's where we go deeper into all 3 pillars: the full model, the risk management system, the mindset and money principles needed to join the 1%, right, of people, of the wealthiest people on this planet, and the exact process to follow on a daily basis, what I've been walking you guys through every day since we started this. If you're serious about becoming consistent, that is your next step. Okay, I used to think that the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. No matter if you're in a series of winning trades, no matter if you're in a series of losing trades, right? You're still able to be disciplined enough to follow your system, follow your processes. Because once you have that, the results will follow. That's all for today, folks. I'll see you in the next session. tomorrow, Friday, April 10th, 9:15 kickoff. As always, I'm the trader here. Oh, you know what? Once again, I forgot to hit that record button, and it's literally written in top tier, hit record. Once again, I forgot. It's alright though, it happens. Um, Second time. It's still the first week, so we're getting used to this. Anyway, as always, I'm the trader here, signing out. Good luck, good trading, happy hunting.